Hello all. Here I am discussing about the topic prepare process cost account in strategic cost management. Here one problem about process account that refers to N Arora cost and management accounting page number 8.31 problem 8.2. Here question is about product B is obtained after it passes through three distinct processes. The following information is obtained from the accounts for the week ending 31st October 2012. Here there are three items is given, total three amounts and a process 1, 2 and 3. 1000 units at rupees 3 each were introduced to process 1. There was no stock of material or work in process at the beginning or at the end of the period. The output of each process passes direct to the next process and finally to finished stock. Production overhead is recovered on 100% of direct wages. The following additional data were obtained. Output during the week, percentage of normal loss to output, value of scrap per unit. In three process, prepare, process cost accounts and abnormal gain or loss account. There was no opening stock and closing stock in the period. So we have to prepare process account. First is process 1 account. Debit all direct expenses, that is unit produced, direct material, direct wages and production overhead. Production overhead is same as direct wages because it is recovered 100% of direct wages. It will have 9000 per unit and amount is 9600. Percentage of normal loss is given in question, that is 5% of output, that is 5% of 1000 unit, that is 50 per unit and amount is 100. It per unit cost. Normal loss amount is calculated by multiply with the scrap value per unit. So we have balancing figure is 950 per unit and 9500 is total cost. The amount transferred to the process 2 account. Debit all direct material cost and wages and production overhead same as process 1 account. Normal loss is given in the percentage of output, that is 10% of 950, that is 95. By scrap value 2 is 3380. Here there is an abnormal loss. So we have to find out value of abnormal loss, that is total cost before abnormal loss divided by total quantity in unit into unit lost. So we have to get 17,840 minus 380 divided by 950 minus 995 into 15, that is 300. 300 is the amount of abnormal loss. So we have all debit amount and credit amount. By balancing this amount, we have to get one amount, that is process 3 amount, that is 840 per unit and amount is 16,800. So we have balanced the process 2 account. So we have to prepare process 3 account. Process 2 balancing amount we have to transfer to process 3 account, that is 840 per unit and 16,800 per unit, and debit all direct expenses, that is direct material, direct wages, production overhead, that's all. So we have to credit normal loss, that is balancing amount, by finished stock is given in the question, that is 750 per unit and amount is 28,500. So we have to find abnormal gain. Balancing figure is in the debit side. Abnormal gain means we have one equation, that is unit entered, that is total up to production overhead minus normal loss amount into unit gain divided by opening amount minus normal loss per unit. So we have get 27,762 minus 630 divided by 840 minus 126 into 36. 36 is the abnormal gain amount. So we have to get 1368. That is the amount of abnormal gain. So that's all about my topic. Thank you.